Of course, joining us ahead of tomorrow's virtual Jackson Hole Economic Symposium is former Philadelphia Federal Reserve President Charles Plosser. Charles, it's great to see you again. Good morning.
Great to be here with you, Carl.
You know, the consensus on the street this week has been that given the Delta variant and even given the fact that Jackson Hole's gone virtual, that there's less of a risk of a market-moving announcement this weekend. Do you think that's fair?
I think that's fair. I think that a lot about the tapering and discussions going on within the FOMC were made clear in the minutes from the last meeting. I don't believe there's any reason for the chairman to get out in front of the committee at this point. There's obviously a growing faction within the FOMC to move tapering up to make sure it starts this year. That those voices are stronger now, and I don't think the chairman's going to want to get out in front too much at this point. So I don't see. I think the risk of there being big market news is pretty minimal.
Right. Although you mentioned the minutes, and it was the explicit use of the words "this year" that did cause some macro strategists to move forward their schedule, their forecast schedule for taper. I think Goldman went to 45% odds in November. They were at 25. Do you think there's something magic about the next couple of months?
Well, I think that certainly the FOMC is anxious to see what the data say. As long as there are no surprises in the data, particularly on the downside, I think they're on track for this year. My personal preference would be the sooner the better, but I think that unless something untold happens, they're on track for that. And whether it be September or November, you know, that's probably a toss-up at this point. But there is pressure growing, given the inflation, given the demands for the Fed to signal in some fashion that it is concerned about inflation, that they'll want to move this year.
What is the risk, Charlie, of them starting to taper, announcing a taper, that they're scaling back stimulus at a time where the economy is slowing because of the Delta variant, which is something we've seen a little bit off some very hot levels, and that extends a little farther into the fall and winter as kids go back to school, and this very contagious, dangerous virus is still with us? Well,
the Fed can't do anything about the virus. It can't do anything about the bottlenecks in the supply chains. I think that the dangers are that the economy would slow a lot, which I think that's not likely. I mean, yes, we may not get 6 or 7 or 8% growth. Maybe it's only 4 or 5, but that's still very healthy, robust growth for the economy, and it's sufficient for them to say, look, the economy is still growing well above trend, their estimate of trend, and continuing to supply demand into that economy, or to stimulate demand in that economy through easy monetary policy is a risky strategy. That's what they did in the obviously 60s and 70s with supply bottlenecks from oil embargoes and oil prices. They kept trying to supply demand to solve that supply problem, and it generated a decade of inflation. So I think the Fed needs to be careful about how they manage this, and just a slowing economy, as long as it's still growing well above trend, I think is sufficient.
So I think of you as a hawk. Your time in the Fed, you always warned about inflation, I can imagine, and it sounds like you're worried about the inflation we're seeing in the economy now, and that you don't think, Charlie, that this is transitory. You think the Fed should be a little more on the ball on tackling this inflation, maybe even talking about interest rate hikes?
I think the Fed needs to be talking about what role policy plays and whether or not this inflation will prove to be transitory or not. We are in a period of time where monetary and fiscal policy are at its most stimulative level we've seen in 75 years. And the question is not, will the inflation be transitory? The question for the Fed is, what is policy contributing to making these transitory shocks more persistent? And what role does policy play in that, both monetary and fiscal policy? That's the question for the Fed.
Shepard Smith here. Thanks for watching CNBC on YouTube.